What is happening, YouTube? It's Matt Faircloth. Welcome to this Mentorship Monday program. My name is Matt. My company is called the DeRosa Group, and we are a real estate company dedicated to transforming lives through real estate. This is Mentorship Monday, where people email their questions to help me at DeRosaGroup.com. That is help me at DeRosaGroup.com, and me or one of our team members will answer the questions right here on this YouTube channel for you and everyone else to learn from. Today's question comes from Duminda. Thank you, Dominda, for your question. Mentorship Monday. I'll just paraphrase it here. I live in California, Los Angeles, and my dream has always been to build a 5-unit apartment building at a reasonable cost. That is your dream. I'm going to help you make that dream come true, Dominda. Currently, I own a fourplex in Inglewood. Very nice. Okay. And there's a 5,000 square foot extra land available in the same lot. Hello, conversation going. I have no idea where to get started, but the rents in Inglewood, California has been skyrocketing, and 1,100 square foot modern newly built apartment rents can be anywhere from 2,300 to 2,600 per month. Few pauses here. I love the Dominda. You put what a square footage of the apartment and what it would rent for. For new construction, guys, you want to just hone it down quickly to what you can get per square foot in rent for the apartment, because the construction costs are going to get communicated to you in dollars per square foot. So there are certain places where the per square foot cost to build and per square foot cost to rent is a favorable ratio. If you think all the way back to the bigger pockets and folks talk about the 1% rule, 2% rule, new construction doesn't quite perform at that level. New construction actually performs a little bit better than the if you can get the 1% rule on new construction, go for it, because it'll work. And the reason for that is new construction tends to have a lower maintenance cost because it's new, right? As long as it was built right and it's got a good warranty on it, then you're not going to have toilet clogs and toilet backups and major renovation and capital improvement. You're not going to deal with a roof leak, right? You better not be dealing with a roof leak on new construction, right? So new construction can tend to run at a lower operating cost because it's new, because it's efficient, because of all those things, right? So if it costs you, let's just say 200,000 to build a property, on the 1% rule, you need to be getting 200,000 per unit to build a multifamily property. This is Duminda's 5-unit, right? So if she pays $1 million to build it and she has the land for free, we'll get to that in a second. Interesting. But if she pays $1 million in construction costs to build a property, then she's at 200,000 per unit to build a 5-unit. If she could rent that 2,300 to 2,600 per month, that would be a green light for me to keep going, keep investigating. I wouldn't go ahead and build the apartment building yet, but I wouldn't say no yet, because you're above the 1% rule. I think that has a high likelihood to cash flow and a high likelihood to build it, refinance it, get all your construction costs out of the property, and then have a stabilized property. It's cash flowing with very little, if not any of your own money left in the property once you build it. Now let's get to the nitty gritty. I don't know if you guys caught this because I just saw it in the question, but I want to point out something that Dominda said, which is interesting. And you guys could look for this kind of thing in your marketplace. Dominda's got a 4-unit that she owns, and next to that property, included in the parcel land, it's probably like a double lot, where, like, if you can picture it, if you're looking at the property from above, you've got Dominda's 4-unit, and then this big old piece of land over here that could be a new construction piece right next door. The point is that you guys could go out and see pieces of land that are cash flowing, because not for nothing, you've got a 4-unit that's hopefully cash flowing, producing income. And you've got this bonus piece of land over here that you don't have to buy additional. You just have to subdivide it and get approvals to build your multifamily property. So you're not going to be losing money while you're going for approvals and everything like that to pay architects and engineers and to build that 5-unit apartment building. You can take your time on do that. And as you come across some dollars, you put it in to get your land ready to develop. And over time, eventually, before you know it, you've got approvals to build a 5-unit apartment building. So I love seeing deals where there is a piece of land that's like too big for what's on it. Find yourself a duplex that's sitting on 2 acres. Okay. That's an interesting conversation, because you could do something with those 2 acres and why the duplex produces cash. Find that if you can. Dominda seems to have that here. So the next point is that there are multiple exits in this scenario. Dominda could get approvals to build the apartment building and keep it as one big parcel of land. She could build the apartment building, refinance it, and cash flow it herself. The way she would do that is she would go, and she's asking here in her email what her first steps should be. So let's answer that. And I'll give you guys one more bonus at the end of this video on the way that she could probably make a ton of money and take very little risk. But here's the next steps that Dominda needs to take, because that was the answer to her question. So let me get on the stick here and answer Dominda's question. Your next steps are going to be to go and call the town, the lovely folks in Inglewood, the city of Inglewood. Call them up and talk to probably the housing department, the planning department, and tell them that what you got, and tell them, I want to know if it is as of right to build a new 5-unit on this piece of land. That means that the zoning code says that, yes, piece of land you got there, it's big enough and you have enough land around it, and there's not, it's close enough to its, or not too close to its neighbors and stuff like that. You can build yourself a 5-unit apartment building right there, and it's as of right, meaning that you're allowed to do it just as you said. You don't have to go through a process called the planning board process. Planning board can be tough. And it can be expensive. You can do it. And then even further, they could say, oh, well, you're not zoned for that, which means that Dominda's property could be zoned to be a 7-Eleven and she wants to build a 5-unit apartment building. That means you got to go through the zoning board, and that can be very, very rough. There's a reason why towns have zonings the way that they do, and that's because they don't want you to put a 5-unit apartment building where a 7-Eleven is supposed to go, right? They don't want you to tear down a 7-Eleven or tear down an apartment building and build an oil refinery, right? There's zoning laws that says you can and can't, what can and can't be in different areas. If you're not zoned for what you want to build, Dominda, it can be very difficult to do it. Anything's possible, right? But you'd have to get the town to approve it through a zoning board. You have to appeal to the zoning board to get them to approve something called a zoning variance, which can be very, very hard to get. But you need an engineer and an architect. If you go through planning board, meaning like something's off, but you're still approved, meaning you can still have an apartment building, but you're too close to your neighbor's house. You can have an apartment building, but the building you want to build would be too tall for what's allowed in your area. So that'll put you through the planning board. That's a much easier process. And that's just a board of people that live around the property. These are residents of Inglewood that are on the board, and they would have to hear your case, and they would say, oh yes, you're approved. You still need an architect and an engineer to do a planning board application. Once you get approved, then you're ready to pull your permits and build your structure. It can cost, for affordable professionals like that, anywhere between $5,000 to $10,000. If they're not affordable professionals, or if there's a lot of work you need to do to get through zoning and planning, then it could cost a lot more. And they're likely going to want you to get a lawyer too, and the lawyer is going to represent you and try to tell you through this process. This is all land use law, so you want to find yourself a attorney and a architect and an engineer that know land use law. A civil engineer, by the way, not a mechanical whatever. A civil engineer that knows the land use rules in Inglewood. Those are your first steps. Here's your bonus, okay? The way you can make lots of money for any of you guys watching, if you guys buy a piece of property that's this big with something on it that only needs this much land, here's what you do. You want to go and buy the property, or in Dominda's case, you already own the property. Go and take it through the zoning and the planning board, get all your approvals, okay? Pay the engineer, pay the architect, maybe get a private lender. And there's a book I know of that could teach you how to get private lenders to help you with that. Get it through the process and get it what's called as of right shovel ready, which means you've got your building permits to build your building, and it's approved. It has all its entitlements, meaning it's approved through zoning, approved through planning, okay? Then you take it and you sell it. Okay. And that means someone could come in and buy that property based on how many units they can build there. In Dominda's case, and in your case, if you guys buy a duplex on a big piece of land, what's your cost basis? Zero. She's got a 4-unit building with an extra parcel of land. So whatever she sells it for is all gravy. And this is like flipping land, and people make a ton of money getting land ready to go and then selling it off to a builder or another investor. I bought a piece of property in Philadelphia one time that was approved to build. It was already approved, shovel ready to build 3 townhouses in Philadelphia. We closed on Tuesday to buy the property, and we were in the ground with it. I had a hole in the ground to dig the foundation on Thursday. It's a beautiful thing as a builder, as a developer, as an investor that wants to build something and have it cash flow right away. Get into something that's ready to go. It's already approved. Yes, it's yes down the street. All the lights, all the stoplights are green, and they can just build it. So they will typically pay you in dollars per unit. That's what we paid. In Philadelphia, we paid $70,000 a unit for what could be built there, and that was just for a piece of dirt. $70,000 a unit, right? And we made lots of money on that because we built the properties and sold them for a lot more than $70,000 a unit. So in this case, in the Inglewood deal, it's really about what a piece of shovel-ready land would sell for. So that is something you guys could research as well. And what's beautiful about this is if you have a 2-acre piece of land, it just goes down to how many units you can build on the land. The more units you can build, the more money you can sell it for, because any developer is going to give you money per unit that they can build. So if they can build 30 units, here's one price. If they can build 130 units, here's a different check for the same piece of land. It's crazy. So that's your free bonus advice, Deminda. And that's the way you can make a ton of money without taking any risk. Or the only risk you're taking is the town telling you no, but it's a small investment to make a big gain, right? That's what I got, guys. I hope I didn't go on too many tangents there, but that's land development's an interesting conversation. And I think in today's world, it is a creative way for you guys to add value to a deal that's, hey, I just thought this is just a duplex and here's all this land sitting next to it. Well, that land sitting next to it could be a possibility that somebody's willing to pay you for. Great question, Deminda. Guys, if you guys have great questions too, I'd like to answer them. Email them to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com. Join us at DeRosaGroup.com if you want to hear more about what we have to offer. That's DeRosaGroup.com. And check out my book, Raising Private Capital, which you can pick up at DeRosaGroup.com too. Thank you, guys. Have a great and profitable week.